Imagine two companies simultaneously among the largest shareholders in Apple, Microsoft, Google, Amazon, JP Morgan, and Bank of America all at once. That is not a conspiracy theory, that is documented public financial reality. BlackRock and Vanguard, the world's two largest asset managers, together oversee more than $18 trillion, more than the entire GDP of the United States. Through that capital, they hold significant ownership stakes in nearly every major publicly traded company on Earth. This is how it happened.
The quiet consolidation of corporate ownership has reshaped modern capitalism. But most people have never heard the mechanism or the names behind it.
The story begins in 1975, when a Princeton-educated fund executive named John Bogle launched Vanguard with a radical idea. Instead of paying experts to pick stocks, why not simply buy all of them? The index fund was born. By tracking the entire market rather than betting on individual winners, Vanguard could charge nearly nothing in fees. Investors loved it. Over 5 decades, trillions of dollars flooded in. Bogle had built a machine that would eventually own a piece of nearly everything on the market.
In 1988, 8 partners, including Larry Fink, launched BlackRock from a single room in New York. Fink's genius was not stock picking, it was risk analytics. BlackRock built Aladdin, a software platform so sophisticated it was eventually used to analyze risk on over $21 trillion in assets globally, including for the Federal Reserve and European governments during financial crises. Today, BlackRock manages over $10 trillion, making it the world's single largest asset manager by a considerable margin.
Here's the mechanism that creates concentration. When trillions pour into index funds tracking the S&P 500, those funds must buy shares in every company on the index proportionally. BlackRock's iShares ETFs and Vanguard's index funds both do exactly this. The result, both firms become top shareholders in the same 500 companies simultaneously. Academics at Harvard and the University of Chicago documented this and named it common ownership, a single investor holding large stakes in multiple competing firms within the same industry.
Look at the documented numbers. In commercial aviation, BlackRock and Vanguard are simultaneously among the top shareholders of American Airlines, Delta, United, and Southwest, all 4 major competitors at once. In banking, they rank among the top holders of JP Morgan, Bank of America, Wells Fargo, and Citigroup. In technology, they hold significant stakes in Apple, Microsoft, Google, and Amazon. Harvard law professor Einar Elhauge published research in 2016, calling this the greatest antitrust challenge of our era.
Ownership at this scale comes with a powerful tool, the shareholder vote. BlackRock votes on behalf of its clients at over 20,000 company meetings per year globally. Vanguard votes at thousands more. Together, they can influence or in some cases effectively determine board elections, executive compensation, and major corporate decisions. In 2021, an activist fund called Engine Number One with minimal assets won 3 board seats at ExxonMobil, specifically because BlackRock and Vanguard both voted to support it. That is structural power.
Economists disagree sharply on what this means in practice. Some argue common ownership softens competition. Firms sharing large passive investors benefit from collective profitability rather than price wars. Others argue passive managers have no incentive to interfere in competitive dynamics at all. The Department of Justice and Federal Trade Commission have both studied the issue formally. The European Commission has opened investigations into asset manager concentration. The academic debate continues, while the scale of ownership keeps growing year over year.
The concentration of corporate ownership in 2 firms is not hidden. It is in every public SEC 13F filing. Whether it represents systemic risk or investing efficiency is a question regulators are only beginning to ask. Subscribe to Black Ledger for more. New episodes every week on who really controls money and why.